My name's Nate. Welcome to the DivMan channel. Today I want to ask, is the market overbought? We keep hitting all-time highs for the S&P 500 and for Bitcoin, and a lot of prognosticators that I listen to on Bloomberg, on the YouTube channel that does streaming. They keep asking the question, are stocks overbought? Is everything overpriced? And here's kind of one of the reasons. This is a historic PE ratio. So basically, this shows the trailing 12-month S&P 500 PE ratio, or price to earnings ratio, back to 1926. And as you can see, when things are way overbought as far as the PE ratio goes, that signals that we may be headed for kind of a downturn. Now, here's why I don't think that just looking at the PE ratio of the stock market, or looking at the fact that we're at all-time highs for any particular nominal value, either the point system of the S&P or the NASDAQ, or Bitcoin's nominal value to the US dollar, it's not enough to say that things are overbought. And let me try to show you why. This is a chart of all kinds of indicators to something called the Global M2 Liquidity Index, or the M2 Global Liquidity Index. The liquidity index is in, that's in yellow. Let me see if I can find a regular value. So this index is just for comparison's sake. Some Polish guy put this chart together, and basically Global M2 just shows you the total number of currency, dollars, yen, pesos, etc., in the entire world. And so it's just trying to show you, is the amount of currency in the world increasing or decreasing? And it shows you the total amount, but it shows you kind of the pattern over time. Now, this chart is showing year to date. So from January until now, it's showing gold and kind of this kind of purplish color, S&P in this other purplish color, QQQ in this other purplish color, Bitcoin in blue. So what do you see? You see this global M2 line here, the amount of currency in circulation increasing significantly. Now, I'm not even sure how to really quantify this, but it's just to give you kind of a comparison to major indices. So gold is up 24% this year. Bitcoin is up, looks like 15% since January. QQQ is up 8%, so that's the NASDAQ 100. And the S&P 500 is up 6.16%. So as you can see, trend line going up. But what is this really saying? Like, ultimately, the reason you should not sweat whether the market is, super overbought in the present time is because really, these days, the market is just a reflection of liquidity. Now, obviously, like this right here would definitely be like a warning sign, like in the dot-com bubble. PE ratios were, at 120 for the trailing 12-month average. Nevertheless, I don't think it's as simple as, the PE ratios are high, therefore recession. Because as you can see here, like the average PE ratio has gone up over time anyway. And I think like this is really like, let's see, what is this date here? In the 1970s, this is when the trend really changed. And what happened in the 1970s, the the U.S. went off the gold standard, and the money printing scheme began in earnest. And so you really see a different trend line starting at the end of the, really the 1980s, but like 1970s through 1980s, when, the Bretton Woods agreement really fell apart, because Bretton Woods was an agreement that the US dollar would be the global reserve currency, but not just that, but that the dollar would be pegged to gold. And when the US went off the gold standard, we ended up just printing money, and money was merely backed by how's the USA doing and how's the US military doing, and how's the might and glory of the US empire. And it's been good. I mean, it's been relatively good as far as just like, are we wealthy? Do we have a lot of stuff? Can we blow stuff up as a nation? We're pretty good at all those things. But nevertheless, really at this point, um, because money printing is like a race to the bottom in some sense, even though we're printing upward, so the money amount is going up, but the value of currency is going down unless your currency is gold, or unless your currency is Bitcoin, or unless you put your money in the stock market in a good index like the S&P 500 or the Nasdaq 100. And so really these things are going to melt up, I think. I don't think that they're going to I mean, there might be momentary crashes like we had with the tariff scare earlier this year, but ultimately people buy the dip, and I think it's because there's really not a lot of better instruments than equities. And even though gold isn't, I don't think it's technically an equity as a spot gold ETF, it can be. So you've got gold, Bitcoin, Nasdaq 100, S&P 500. All of these indices are trending upward, at least since about, looks like that was, February. This person who made this chart is, I believe, Polish, if I'm interpreting what language this is right here. But nevertheless, the trend line goes up, and really, I think if there is a financial crisis, there might be a temporary downturn, but ultimately people these days are saving in the stock market. They're saving in gold, and especially central banks are saving in gold. And increasingly people, and maybe even central banks, are saving in Bitcoin. I believe Russia may be saving in Bitcoin. And it's very well attested that central banks are moving off the dollar, off of treasuries, and into gold. So I just wanted to do that just to push back against some of the kind of prognosticators, people who say that everything is overpriced, the stock market is just overbought and all that. Certainly, PE ratios can be a helpful indicator, but it's no longer the same world as Ben Graham and Warren Buffett began to invest in. PE ratios aren't as helpful a metric as they used to be. And so really it's only in these exaggerated scenarios, like in the dot-com bubble, that I think you really should worry with the PE ratios going up. Because, with the Weimar Republic, the German Empire between World War I and World War II, the stock market of the Weimar Republic did just fine because it was able to reprice a lot faster than a lot of items. And people who kept their money invested were able to, kind of ride the inflation wave upward. So hope that this was helpful. I hope you stay invested as a general principle, although technically I want you to know this is not investing advice. But generally, a good principle is to remain invested unless you're doing some trading, in which case I hope you're good at it because it's a very difficult thing to do, in my opinion. Thanks for your time. Have a good day.